44 years ago, Deepak Parekh left a plush job at a foreign bank in India to join his uncle, also a banker, Hasmukh T. Parekh, to set up India's first mortgage finance company. That's Housing Development Finance Corporation, or HDFC, as we know it now. Now, over time, HDFC has spawned HDFC Bank, a very successful institution, insurance companies, asset managers, and a variety of other businesses within the financial services space. It has also helped co-found a variety of independent institutions in the credit markets, from CRISIL to CIBIL. Now the two HDFCs are set to merge and create a bank with an asset base of approximately $340 billion. That's twice the size of ICICI Bank, its nearest private sector competitor, and just about half the size of SBI, that's the largest bank in the country, government-owned. This is the sunset that HDFC chairman Deepak Parekh hopes to walk away in, except that I don't think he will ever probably retire. Today, I have him here with me to talk about what the last 4 decades have been like in terms of institution building. And of course, since we have his time, we can't not ask him about the economy. So, Mr. Parekh, thank you very much for joining us. In reverse order, economy first, then the merger, and then leadership and 4 decades of institution building. How are you reading the economy right now?
See, the International Monetary Fund came out with a report last month in April 2022, saying that the global growth is going to come down. There's a slowdown in the global growth. And they brought down the global growth for 2023 to 3.3% from 3.6%. And this was, and they have amplified this by saying the advanced economies will only grow at 2.4%, while the emerging economies will grow at 4.4%. The medium term, this is their outlook, the medium term. However, they've said India in 22 will grow at 8.2%, which we think will be slightly lower, and 6.9% for 2023. That is their projections. China this year will have a very low growth rate of 4.4% and 5.1% next year. So basically, the reason for this pessimism of lower growth is due to heightened geopolitical risks, steep increase in prices of commodity prices, including oil, disruption in supply chain because of COVID lockdowns in China, and inflation. With inflation, interest rates go up. As interest rates go up, growth has to slow down. And so there are headwinds against growth globally. Fortunately, we still remain as the largest, as the fastest growing large economy.
Okay, let me try and probe a little bit further. We've just had an out-of-turn interest rate hike by the Reserve Bank of India, literally hours before the Federal Reserve started the first of what I think many people expect will be many, many hikes. What is your expectation of how the rate hike cycle will work first in India? Then we'll talk about the global context.
No, in India, it was expected. It was expected even during the last credit policy, monetary policy. See, Fed increased it by 50 basis points. Bank of England increased it by 25 basis points. And this is the beginning. If you see inflation across major countries, Japan is very low, but US is the highest inflation rate. And therefore, the US economists are feeling there may be a stagflation in US. Lower growth, higher inflation. But India's inflation is still not that high as Europe and US. And so we have still some hope with large agricultural base. And I think our economy, government revenue receipts have been phenomenal this year. 46% growth.
Correct, but there were one-offs in that, sir.
No, it's one-off.
Capital gains tax, STT, they all helped contribute to the buoyancy. Yes.
And exports have done very well. Our foreign exchange position is extremely comfortable, though the reserves have come down much.
Because we are defending now the rupee.
We are defending the rupee, and the crude has gone over $100. And, you know, we use 5 million barrels a day. 5 million barrels a day of crude. and 85% of
I
it
get
is
the context,
imported.
Mr. Parekh. What is the rate hike cycle you're expecting? Are you expecting equally aggressive hikes in India?
I don't expect aggressive hikes in India because we have to err on the side of growth rather than uh, price stability. Price stability, because of surplus commodities, price will be stabilized. I'm surprised why is some agricultural produce gone up significantly when there's ample supply. Most factories are working at 70-80% capacity. If the demand increases, they can ramp it up to 100. And so there is no shortage of supply. The shortage which is coming in India today is the import of chips, semiconductors. That is stalling. I'll give you one company where I'm involved with. Order book is an engineering company. Order book has gone up 61%. Sales have only gone up 10% because we can't supply. Take the case of another auto company. They recently announced a new utility vehicle, SUV. They've got 25,000 rupees paid by 1 month, 11,000 people paid. It's over 150,000 bookings for a car which is not ready yet. But they can't deliver. They said, we'll take 15, 18, 24 months because we don't have the semiconductors, the chips. So the shortage of raw material is hampering our growth, which may cause a little inflation because commodity prices have gone up, crude has gone up, and we are dependent on this. So there will be inflation in India. I don't think we'll get to double-digit inflation.
And hence you don't think that the response of the central bank will be
that
aggressive?
severe, that aggressive to start with. I think it will be modest growth, modest increases.
So you're clearly saying that there is a distinction between how you expect the RBI will deal with this and how you expect, let's say, Western central banks to deal with it. Because even as late as last evening, we had the Federal Reserve Chairman talk about how they intended to continue to fight back inflation, and now the consensus is building up that even if it means a recession or a hard landing, that's exactly what the Fed wants to achieve to kick inflation in the gut, if I may use the phrase. So that is the expectation is aggressive rate hikes till that happens. In India, you think the path will diverge?
Well, when they say aggressive, Inka, they mean during this year there may be 2 more hikes of 50 basis points. I don't think even in US, maximum 3. So, and in India, I have in my 44 years seen interest rates from 6-7% to 18%. And we still survived. Banking still survived. Banks still made profits. Mortgage business was still rampant, buoyant, because there are certain tax concession also for a salaried person. The interest you pay is allowed as a deduction. And so there are some tax breaks which helps the demand to remain.
Since you already pointed out that you think financial services institutions, banks, and BFCs might be able to stomach this, but what about your customers?
I'll tell you why they'll be able to stomach it. Let me give you some. See, one of the banking products is consumption, consumer credit. Consumer credit in India is only 37% of GDP. It is 80% in US. Even in China, it is above 40%. Even from 37 to go to 40, 45 requires large sums of money as disbursement. So I'm confident that the banking sector and in retail lending, consumer credit is one of the items. So consumer credit is going to grow in India. It has to match the world. We have to catch up, and we will catch up. Take our industry, mortgage is only 11% to GDP in India. In China, it is 18%. If it goes from 11 to 15, we'll add $1 trillion in outstanding loans.
I'm not denying the long-term potential.
So it's not long-term, it's medium-term. It's a short to medium-term. So it's the same thing in insurance. Even Malaysia, Thailand, the insurance penetration is more than India. Asset management, I can't tell you, only 3% of Indian population have money in mutual funds or equities. This has to double. You see the demat accounts in the last year have doubled. I think it'll double further.
But how does this square with a rising interest rate scenario? How does this square with consumers feeling confident enough? Because we've already seen a pullback in consumption demand. We've already seen what people are calling shrinkflation, or consumer companies reducing pack sizes. we're already seeing rural demand continuing to be very depressed. And in a scenario of rising interest rates, how does this then impact smaller businesses, which have taken several knocks over the last 5 years?
Yeah, smaller businesses have taken several knocks, mainly COVID and labor. Labor has gone away. But I personally am optimistic because of the large country we are in and because of the need for goods acquisition. And compared to the neighbors also, our penetration levels are so low that if the price goes up by 5 or 10%, it's not going to deter them because you get bank credit with it. And our bank credit outflow is very low compared to, again, our peers. Nowhere in the world we have such low penetration.
You have a ear to the ground with how companies, large businesses are viewing the environment.
Let me tell you,
Are they
a year
feeling
ago,
confident to continue capex?
a year ago, core industries were saying we don't have any plans on the drawing board to spend capital expenditure for new plants because our factory utilization was only 60-65. Now they're saying it's 75 to 80. So I know companies that are looking at new investments for greenfield projects, which is what we need in India.
And you don't think that will get set back because of a rising rate scenario?
And again, the amount of government spend. Let me give you one more. Urban infrastructure projects. Urban infrastructure projects per capita spend is only $17 in India. The global benchmark is $100. And China is 117. Now, this $17 per capita is going to be very soon become $40 because 6 cities are doing metro simultaneously. Massive road construction is happening in India. Massive road construction. Even in a city like Mumbai, you see there are 3 new road construction of maximum utility and use. And large projects is not 1,000, 2,000 crores. It's all 70, 80,000 crore each project. And funding has been done. And construction is going on. This is one city. You see it everywhere. So road construction is going to take, roads and railways will really grow significantly. So use of money is there. Need for these services is there. Yes, inflation is there. Yes, we will have a 7, 8, 10% inflation. I don't think it's going to slow down growth significantly. Yes, from 8.5% will come down to 7%.
Let me talk about the HDFC Bank deal. You've answered several questions ever since the announcement. I won't get you to repeat them. I just want to know if there is any update on the regulatory approvals. Have you had any conversations with the variety of regulators, but most importantly, with RBI?
No, the latest is we have to, the first thing we have to do is get the CCI approval.
Right.
Competition Commission. Although the bank doesn't do mortgages, we don't do any banking activity, so there's no overlap.
But you together size, yeah.
But still, the application is that thick.
Yes.
And it's still not submitted.
Oh.
There are 20 lawyers working on it because each subsidiary has to be seen.
Sure.
And we hope to submit it by the end of this month or first week of June.
Okay.
And they may take 2-3 months because it's a straightforward case. It's not there is no monopoly and there's separate businesses, but still that is under preparation, believe it or not. I was aghast to see that why does it take so long? But the lawyers, this room is used by 20 lawyers every day.
Okay. RBI?
Reserve Bank, we are in dialogue. They've asked us number of questions, answers. No, that what is our government security holding today, things like that. So we expect to get some, we are having a constant dialogue. Every second day, our people and the RBI are meeting. So it is actively looked at by RBI. It is work in progress. And I have not seen any glitches or hitches or anything so far. It is exchange of information. And basically, they've said we support it. Now, we have to see the details.
So you're confident that some of the time concessions that you asked for
we hope so,
from the Reserve Bank of India will be granted to you in the merger?
We hope so because, there's certain things that we can't sell in a hurry. If we are being asked to sell a company which
you've
doesn't
explained
fit in
that
a hurry, Yeah, so then, then the value will get depressed.
But even on the CRR, SLR side or the
CRR,
priority
SLR,
lending
we have asked
side,
for time.
I know.
We've
Have
not
you got
asked for
any
any
response?
exemptions. We have
I know,
asked
just
for time.
Have they expressed any yes, no, maybe
No.
to your request for time concessions?
No, it's being under review at the moment.
It's under review.
Under review.
As yet, though, their
No
response
decision
does
has
not
been taken.
suggest.
Huh?
As yet, though, their response or their questions do not suggest that they might be averse to the timed concessions that you've asked for.
Yeah, we hope so.
Correct? Have you got any response on what happens to the holding of a variety of financial services subsidiaries, like the asset manager or the insurance companies?
So our application to Reserve Bank is very clear. Other banks also have insurance and asset management and private equity. So we have said that please allow the bank to have the same as other banks have it. And when the RBI decides that the equity holding in an insurance should be X and not Y, we will comply with it as others will comply.
Mr. Parekh, there was let me put it this way. I don't think the market was surprised at all by your merger announcement, because this is something that has been discussed for almost a decade now, as you've pointed out.
But it came as a shock surprise.
Well, maybe the timing did, and I think that
no one had a
inkling that you would do it now. But I think this has been discussed. On paper, it's been discussed, in the past, and the response has been tepid is maybe the best word I can use, right, for it. Now, of course, I know that stock prices of all financial companies have reacted to FIs pulling out. But it has also been the case that there is some skepticism of how this merger will go through, what the final shape will look like. At that point, you all had said that maybe we didn't explain this merger in detail enough. You have since been on roadshows, I understand?
Yes.
What is the feedback you've got?
No, feedback is positive. Shashi has just left last night for a 10-day roadshow in the US and Europe. Okay. He'll go,
any feedback on
Keki
modifications?
Has just come back from Singapore.
Any feedback on modifications?
No.
Any suggestions on maybe why don't you look at it this way or look at it that way?
No. We have to explain to them what are the benefits. Why is it a no-brainer? It is a merger of two equals. It is a no-brainer because we can get lower cost money, and housing can really be a significant part of our retail loan. And for the bank today, the retail loan, duration of the retail loan is only 14 months. So every 14 months, they have to replace it and show growth. Now it becomes 6 years average. So, it's a no-brainer. It's absolutely no-brainer.
So there is no specific feedback you've gotten from shareholders, large institutional shareholders?
Feedback is, earlier they used to say, is it too big to fail was very common language. All of you use, too big to fail. Now the common lingo is too big to grow. Now, we will show you how to grow. Just one point, today only 2,000 branches of HDFC Bank distributes mortgages. They have 6,000 branches. They are going to open up all 6,000 branches. We have got the highest loan applications ever received in the month of March. 84,000 individuals with 2,000 branches of the bank and our 600 odd branches. Housing is on a real uptake. Please trust me. 34,000 crores is the value of 1 month's loan applications. Retail, nothing wholesale. And it has been 20,000. It's gone up so much in 1 month. So fine, it may settle down at 30, 25, but that's the kind. And with a lower rate of interest, we can really increase our exposure in mortgages. I am very confident that we'll be the biggest mortgage lender in India with our brand.
So I think there were two concerns with regards to the merger. One being that it could potentially depress for about a year or two the financial ratios or the return ratios for HDFC Bank, given how the situation pans out on SLR, CRR, priority lending. And the second was, of course, that is this merger being driven by a too big to grow sort of mindset or too big to grow fear that at this point both institutions have hit their limit in terms of growth. And the best way to sort of beat that is to come together.
I don't think so. We are still growing.
So you're confident post-merger you'll be able to maintain these growth rates?
I'm very confident we'll be able to. We are opening 1,000 branches, more branches for the liability side, because we need liabilities if we get business. So you have to give us time. This is the biggest merger. It takes time, 1 year to transition. And you have to have trust and faith in us that we are capable of doing it and capable of showing good results at the end of it.
Okay, so at least
Give
12
us
to
some
18
time
months to
and-
close it.
Huh?
And at least 12 to 18 months to close it.
Yeah, 12
And then
months, I would
another
say.
year or two thereafter.
No, you
for
see there.
full integration benefit.
No, take for instance, capital required by the bank. Bank will not need more capital for some years because we have surplus capital. And our capital adequacy ratio is higher than the bank. So, there are certain benefits.
That's if your expectations on SLR, CRR, etc. go through.
If they go through.
Yeah, if they don't go through and the RBI says
but
no.
Even
so
then,
is there a plan B?
No, there is a plan B.
What is the plan B?
No, the plan B is that we have a plan B.
What is the plan B?
No, plan B is there. We wouldn't do this without a plan B.
Yes, so I figured you wouldn't do this without a plan B.
Plan B is we'll be willing to comply with whatever RBI has to say. We have
That's
no choice.
Not a plan B. That's a no choice situation. If the RBI says no, what's the plan B?
Plan B, we'll have to comply with the regulations.
That's not a plan, sir. That's required regulatorily.
No, so there are other ways of meeting SLR and CRR regulation. Requirements.
Such as?
Like Reserve Bank itself has come out with some policy in the past that if you borrow 7-year plus money, it doesn't attract SLRs. We have fair amount of 7-year money borrowed. And we can still borrow 10-year money even now. We borrowed 10-year money last month. And it was oversubscribed twice, 10,000 crores. We could get 20,000 crores from the pension funds and the provident funds and all. So we could do in the next 1 year, three, four issues of 10,000 crores. And these are all, we have it in our mind what we have to do.
And this would bring down your incremental CRR, SLR requirements by how much?
Have you done that? Numbers you have to ask Keki or others. I've seen the numbers. It's manageable. But we hope...
So it would bring down the potential burden. If RBI doesn't give you a time concession...
Then they have to
There are mechanisms like this that you think would bring down your incremental burden...
Significantly.
So at least by more than 50%. Significant means that usually.
Yeah, we have government securities already with us. X amount. Plus we have 7-year plus bonds.
So I'm looking at a Macquarie estimate, which says that, HDFC Bank will have an excess SLR, CRR asset requirement of roughly 700 to 800 billion rupees.
As we speak, the bank also has some surplus government securities in their books. So
So you think that this requirement for SLR, CRR, without getting into specific numbers, could be cut down by more than half if you were to undertake some of the steps that you've just...
that we have taken adequate care and we feel that the Reserve Bank will be accommodative and give us time to be fully compliant and grandfather our assets for some time. Assets and liabilities. That's all I'm saying.
And if for some reason the Reserve Bank of India...
We'll have to make alternate plans, which we have in mind what we can do. I can sell 1 lakh loans to 4 banks. There are different ways of doing it. You journalists don't understand.
So we are asking, that's why. I'm not assuming or
can't
judging.
I sell my loans?
So you're saying your plan B will allow you to not need to make these additional CRR, SLR requirements?
It will be required to the minimum. We'll do whatever is necessary so that more borrowing and more thing is not necessary by using different methods.
And so that puts paid, at least to some extent, to the concerns that at least for the first year or year and a half after the merger, the ratios for HDFC Bank would have come down because of these additional requirements.
Yes.
That's your response to those who are concerned as shareholders.
Yeah.
Why have you not articulated this more? Because as you pointed out in previous interviews, this is a related party transaction. It will require majority of minority. You will need shareholders to support this. And if they know all of this, then they are likely to support it more.
Tomorrow, we have to wait for the RBI nod.
Okay, all right.
First
so post that, you will make it clear to them. All right, fine. Okay. So my final question on the deal had to do with how you see the coming together of HDFC and HDFC Bank change the competitive landscape for the same reasons that y'all are merging today and the size that y'all will represent as a merged entity. this may spark off consolidation, you think, within the industry?
There will be consolidation. There has to be consolidation. Smaller banks may merge with larger banks. Some NBFCs can merge with banks. And so this will, the upper layer of NBFCs above 50,000 crores, they have, if they have regulations which is like a bank, then it is difficult. The arbitrage between an NBFC and a bank disappears. And NBFC had a lot of freedom and flexibility, which goes away if you're a bank. And so if that goes away, then large NBFCs will have to find a way of how to survive or how to grow with the same regulation, maybe SLR, PSL and all that. Then it'll be difficult to sustain. And we've heard, and the press reports have said that in October, they're going to come up with new regulations for large NBFCs. So this was also in anticipation of that, our decision. So I think there will be now will RBI give banking license to industrial groups? Now that I cannot answer that question.
Yes, and I think that's where I find it a little confusing to read what the regulator wants, because some of the largest NBFCs are industrial group owned NBFCs, right? And so if they cannot either, get a banking license on their own or merge with an entity that allows them to become a bank, then where does this regulation move them?
No, I personally feel that this could be the beginning of securitization in India, where large NBFCs would be willing to sell their assets to a bank and get cash, so come down below the 50,000 limit. That could be one possibility. This could be a model in India where if the government and Reserve Bank do not want to have larger NBFCs, then they'll have to sell their loans to existing banks or existing smaller players.
Now I want to talk about your institution building. Mr. Parekh, your uncle, H.D. Parekh, had this vision that Indians should be able to afford a home. That was his driving agenda to found HDFC. You joined him. What was your driving agenda to build this institution out over the last 4 decades? What goal did you wake up with every single day?
No, it was very tough in the beginning. As you know, our IPO failed miserably. It went into the neck of underwriters. We had to get it underwritten. And it was quoting at a 20% discount to listed price, to the offer price. And it took 2-3 years for us to even get to the par value, to the IPO cost, IPO value. So it was difficult in the early days. But I've also studied in London. I've seen every street corner there's a building society. Everyone you work with in the office, everyone has a loan. They get a degree and they get a loan. They get a job and they get a loan. They get a degree, they get a job, they get a loan. And they pay over 20 years, 25 years. And the mortgage is transferable when they move places. So it is such an easy system. The family dependence overseas is not that much as it is in India. In India, it was a lot dominant by family help. You want to buy a home after you graduate and get a job, the family supports you. But to be absolutely candid, why did mortgages not be done 50 years ago, 100 years ago in India, when it was there hundreds of years in UK? We did not have a floating rate mechanism. Indian banking for many, many years, until some 30, 35 years ago, we had a fixed rate. So it was difficult for banks to borrow fixed rate money because their retail deposit rates keep changing. And so there was no appetite for banks to give 15-year loans because their liabilities were not 15 years. There would be a total mismatch of asset liabilities. And when we started, we only gave fixed interest rate for many years, for a decade almost, where we borrowed 5-year, 10-year money and then gave that money. We didn't do 1 month, 3 month borrowing, but we did longer term borrowings. And that's how we had to manage. Later on, variable interest rate became the norm. And once it became the norm, every bank in India started mortgage loans.
But that explains the business dynamic. What explains the Deepak Parekh dynamic? Your uncle had a vision of building a mortgage finance company. Did you share in the same dream, Or were your motivations different? You wanted to be entrepreneurial, not just an employee of another bank.
I'm still an employee, although I'm retired. I'm not an employee anymore. But I was always an employee in HDFC. I may have run it as an entrepreneur, but I didn't own it.
So, what was your dream when you were in mid 30s when you joined this?
Well, dream was one factor that played in my two factors. One was I was with Chase Manhattan Bank, very comfortable, very happy. They were transferring me to Saudi Arabia at that time because of the oil boom there. And Americans were reluctant to go. Fancy salary and 2 months vacation and all. You work 10 months, you take 2 months off, all kinds of privileges. I didn't want to go to Saudi. I just felt that it's not a place I want to go at that time. And so I would have to look for another job here. That was another thing I had to change. And secondly, my uncle was very keen that I come and support him and help him. Although he didn't own, he had only 100 shares or 10 shares of 100 rupees. He never had any more shares, but he was saying that stop gallivanting around the world. And he had no children. He looked upon me as his son. And so there was some family obligation also, to be honest.
So, through all of this, did you have your own deep aspiration to build out, this
then
financial institution?
Once I joined, yes, we had to. I remember the first annual report. We had the borrower's photo, and he was the first borrower of HDFC.
Sure.
So no, it was a very exciting journey, and the best part was that during these years, the financial sector opened up in India with liberalization and all. So we saw an ad in the newspaper which says RBI is willing to look at new applications for banks. So we convinced our board. We had a team, and prepared a draft balance sheet and working and submitted our plan to RBI. Then I was on the committee set up by government to whether insurance should open up under R.N. Malhotra, the ex-governor of RBI. And while spending 6-8 months working on that report, I thought it's a great business to be in.
And you were the first to get the insurance license.
Get the license. Well. So, that journey has been quite interesting.
So I want to talk about that. What do you think you got right? I know you can't outline everything, but as you look back, there must be one or two things that you got right.
No, we got into banking at the right time.
Okay.
I wish we had a larger holding in it rather than 21%. But we got into banking at the right time. I think we got into the insurance business at the right time. And asset management, we were a bit slow. We were not the first. We were probably the last one on the last. But we did well. And so there are no regrets at all.
No, not regrets. Just what did you get right in building out these many institutions?
No, these are running
because you have a variety of financial services.
Yeah, but
businesses.
You need governance. You need good people. And you hire good managers and let them, without interfering, let them work on it.
Risk
delegate to the extent that it is abdication.
Okay, let me suggest one thing. Risk management. I think one of the things that both the top two HDFC institutions have gotten right is the ability to manage risk, unlike most of the financial services businesses in the country. How did you do that?
No, in the sense, everyone who came for a mortgage loan also wants a much higher amount. But we had to give on his earning capacity,
sure,
on his cash flow, not on the value of the property, but on the cash flow. Always lend money on cash flow and not on asset value. That is the first principle. I think bank can all be followed that also in personal loans. And what is your cash flow? And therefore, we have probably in the whole industry, we have the tiniest loans against property today. Maybe 2% of our portfolio, maybe very careful. Loans against property. Because if the income is going to repay the loan come from the business, then if the business doesn't do, you have problems.
So risk management was one thing I identified. The second thing was, if I can call it, the Deepak Parekh factor. I believe you're the one who suggested the bank license to the board, and the first response of the board was no. And you had to convince them at that point in time. And I can't for the life of me imagine if you had listened to the board and decided not to apply or pick that bank license, what would have happened, right? So that's one. And I'm also told from everyone I speak to that you have the ability to hire some of the best talent out there in the industry. So is there a Deepak Parekh factor to this?
I guess you have to create an atmosphere, an environment, a working environment which is conducive and which is easy with good governance standards, and then people come and work with you.
That's great. How did you convince the board? Let me ask you that. Let me put the same question to you differently.
I had to fight with them.
You had to fight with them.
No, fight with
Tell
them,
me the
argue
story.
with them, fight with them that you don't know any banking. So I said, we'll hire the right people. We'll hire a team. We don't need to know, but we'll hire a team. Then they insisted also on getting some foreign collaboration. And that's the reason we went to Puri, and Aditya and I went to London. We met NatWest, we met DBS, we met Bankers Trust. Everyone said yes, but NatWest was the first.
Correct. And I think, as you've expressed now and in previous interviews, you wish you hadn't given as much equity to NatWest at that point in time.
Apart from that, 18 months after, they got into difficulties in England. So they had to come and sell their stake. And they first offered it to us. And it was at 70 rupees. I said, we'll be foolish. We gave it to them at 10. In 2 years, it's 70, and we'll buy it at 70. So I said, we are not interested. We should have bought it at that time.
Yeah. Well, why Aditya Puri or anybody in his place to run the bank? Why not you? Why did you not decide to take on the role yourself? You had by then built a fairly successful
you needed a banker.
mortgage.
You needed an Aditya, and he'd worked.
No, of course, I'm not taking anything away from Mr. Puri. Please,
Yeah.
I'm just saying
And
at
he's
that
done a
point in
remarkable
time.
job for us.
Yes, but why did you at that point didn't you feel that okay, I've built this
I
mortgage
was running
finance?
this, I was running
Yeah, but
this,
you had
so
built it and
yeah.
it had the good leadership, and you could have moved on.
Frankly, I never thought of it.
You never thought of it.
I never thought of it because I'm quite happy sitting here and handling this job that I never thought of it. And the bank also, the board also said get bankers to run it. So we got Paresh and Aditya. Aditya helped us get more people whom he knew from the banking circle.
Okay. You come from a family of professional salaried bankers, if I can call it that. Your uncle founded this company. Neither one of you owned it ever. Can you talk me through why? I'm just curious. Why is this not a promoter-owned institution?
We don't have the money to
Because
buy.
Deepak Parekh but you founded it many years ago. Deepak Parekh, HD Parekh are synonymous with HDFC from a brand point of view.
But everyone thinks we own it, but we don't own.
I know, which is why I want to underscore that.
Not even 1%. It's 0.00 something.
That's what I want to underscore. How did that come to be?
No, when you're an employee, you're a salaried employee, you're not an owner. You don't have the money to buy.
But you are a founder.
No, you're founder, but you're a professional founder.
You could have kept some of the equity for yourself.
How? Free? Without money?
Well, you founded the company.
Years, I had no
not
money.
You, but Mr. HD Parekh could have kept some of the equity for himself.
I know, but he didn't have that kind of money. He was living in a rented house. He didn't have that kind of money.
So at no point in this journey of 4 decades have you been tempted to say, I wish I had a large ownership stake in this?
Never.
Do you regret that at all?
No, you
look
don't
at
regret.
the
What are you
immense
going to
amount
do?
of
What are you
wealth
going to
these
do with the
institutions-
kind of, the market cap, and what are you going to do with this money? Acquire more things. You can't change you eat 2 meals a day. You eat 2 meals a day. When your time has come, you go. You have enough money to educate your kids. Then it's their future.
In fact, I read in one place, you said you took on positions in some of the boards outside of the HDFC empire.
Just to earn some money.
Just to earn some money so you could put your kids through the education that they wanted. So I'm still trying to square this. I mean, I know that you don't own any stake or some insignificant ESOP through stake in this company. I'm just curious as to how or why through these 4 decades, neither Mr. H.D. Parekh nor you thought that you should own a larger chunk of this business. It could not, after a point, it could not have been just capital. Maybe in the early days.
Not 4 decades, because I retired 12 years ago.
From an executive position.
So I got no ESOPs last 12 years.
So what is your shareholding in the HDFC now?
No, it's 0.04 or something.
So I ask this question again, Mr. Parekh. In 3 decades,
I don't regret it at all.
I'm not saying do you regret it. Was there any point in time where you all thought that, okay, maybe we can raise some funding and, own a significant share of HDFC?
I didn't want to borrow and do all that. I've never borrowed money and I don't want to.
You've never borrowed money?
I've never borrowed money. I've only lent.
You want to rethink that statement right now, given that you run two of the largest lending institutions in this country?
Somehow it's not in your nature. So
Because you are entrepreneurial. You could not have built this without being entrepreneurial. You have said in so many places you ran this like an entrepreneur. You ran it like your own company. And yet at no point you felt that you wanted to own any chunk of it. The stake in any
mindset
case.
is salaried. I never had that kind of courage to branch out and start a private equity. And, like today, most youngsters want to do. Most youngsters don't want to do a salaried job. They want to be on their own. It was not that 40 years ago.
That's what I was challenged in reconciling, that if the mindset was salaried, how did you build this so entrepreneurially?
No, mindset may be salary, but you have to sit here the whole day and think how to grow, how to build. So you continued working.
Okay. Okay, I have one question, that comes from all the institutions that HDFC has helped spawn over the years, right? Whether it is from within the group itself or outside, IDFC, CRISIL, CIBIL. And that question has to do with IL&FS, Mr. Parekh. I think this is the only question that has come up against you in the last 10 years, is that how is it that so many blue chip institutions owned IL&FS and nobody spotted what was going wrong there?
See, I was involved with it the first 10 years. It had one subsidiary, only one subsidiary. After I left, in the last 10 years, I think, they spawned some 200-300 subsidiaries. And no one knew the financial worth of these subsidiaries, and they were in road, and they were in power, and education, and different. And, they started working with the state governments. And when the intentions of people go wrong, that let's make money, then no institution can survive. Everyone knew it was weak. Everyone knew with so many subsidiaries it was weak, and with state government as partners on water project and all. These are 20-year projects. You have to start investing, you don't get returns. Tirupur water and, power projects. And so I think it was a big problem, a big fraud. And when intentions went awry of the management, senior management, then you can convince anyone to become shareholders and give limited information and cheat the people, cheat the investors.
Is that maybe one of the few regrets that, though your exposure to it was limited?
I could not do anything because I was there for the first 10 years as chairman, and it ran. I could say that it was okay. It had only one subsidiary and not multiple subsidiaries. But it's the same thing with IDFC. IDFC also, we had a tough time in running IDFC, and these were the main PPAs. We had to fund because we had limited scope to only fund infrastructure. And it was government had given the money, 1,000 crores. So it was difficult, and telecom and power were the only things, because roads were not that popular those days, where large roads were under construction when IDFC started. We had to depend only. See, if you don't disperse, the feeling is you're not doing anything. So you had to disperse, because government felt, oh, we started it and no one is doing anything, no disbursement are taking place. And then we made mistakes in some power purchase agreements. They were one-sided, the state government reneged. And so also they learned the hard way. We learned the hard way in IDFC. And we had no choice but to become a bank.
Okay, fair enough. I have just two more questions before I end this interview.
Every time it's two more.
No. First time I said two more questions. Okay. There are two things you've identified in many of your interviews that I think you've said have worked in building out these institutions. One is affection, the affection with which HDFC has treated its customers. And the second is accessibility, the accessibility that you've always given people as a leader. I want you to tell me how these two attributes can be scaled to the level that you've managed to scale them. Because it's very easy to understand what it means to have affection for a customer and to be an accessible leader. To do it at this level across these many institutions under a brand is very difficult. How did you achieve it?
Please understand, every customer who walks into our office for a mortgage loan has his or her own tale of woes. Not enough money, price is too high, may not be able to service the loan. So you have to listen patiently at their sorrows, at their stories, and be as sympathetic as you could. You may have to reject the case, but reject it in a nice manner, that the person doesn't feel offended. And we had to train people that way, because we were sitting with files ourselves. We were appraising in the beginning. For so many, I used to go to my branches and we used to take files to the hotel and sit and go through what loan is he asked for, what is the background with the branch manager. So, so customer service was something we had to grain into our people, that you have to hear the story, you have to be patient, and therefore sometimes productivity of some people is less, because it takes, it's not like a car loan in 10 minutes you can do it. The biggest asset a person is purchasing, he's putting all money from different sources together, support from family. So you have to be sympathetic, you have to be caring, you have to be affectionate. Only then he'll feel comfortable, he'll come to you. And we did not advertise. Word of mouth was the best advertising for us. We didn't spend lakhs and crores of rupees in advertising even when we started. It was the word of mouth that got us more business.
Can these attributes survive in this day and age?
I think they can survive.
They can.
I think they can.
Affection
survive.
in the day and age of WhatsApp loans.
Whatever it is, even
accessibility,
you can be,
even after Mr. Parekh leaves office.
No, you can be sympathetic, you can be concerned even on a WhatsApp. You don't have to be rude, you have to be tolerant. And I think it's possible. It's possible. But a huge amount of training, as you have 6,000 branches in the bank. How do you train all those people? And attrition, attrition is very low with us. But in the bank at that level, attrition is higher at the lower level. So, like in IT, the attrition is 100%. That means you keep training people, they leave. You keep training people, they leave. So to get that kind of customer centricity, customer service, a delight to a customer is not that easy in a larger. It's possible in small. If you become too large, it becomes impersonal. You can try. The other way you can do it is, even today, I get complaints. Not from, also from HDFC, but bank, insurance, asset management. I handle it myself. In the sense, I send it to the CEO, please revert. And my secretary has a list who has not reverted, which is not solved. So you have to take that personal interest. Because, when it takes a long time for someone to complain and send it to the chairman. So he must be agitated, he must be upset. I call people, just calling them comforts them.
Yeah, well, to get time with Deepak Parekh is
No, it's not that. It says someone took care.
And responded
someone wrote read our letter and called.
Okay. So this is my last question. What next after you retire? Because you say you want to retire, but I can't imagine you retired. So will it be politics, which apparently is one of your regrets I read somewhere?
No.
Or will it be Friends of Deepak Parekh?
No.
Which I'm told is what your club of friends is informally called.
Keep my feet up and relax.
Nobody's going to believe that, Mr. Parekh.
Wait and see.
Keep your feet up and relax. Not politics.
You can't not. Politics never. I
read somewhere that you said that you felt like maybe you regretted maybe not considering some public roles?
No, public role, not politics. I was offered some public sector bank,
That kind.
that kind.
You were also offered finance ministership once, no?
No.
But
It's
you
all
came
rubbish.
close to it.
It's all rubbish.
Okay, so no politics.
No politics. It was only some of these public sector regulatory bodies, public sector.
So is that something you'll consider?
No. At this
Not
age, you
anymore
can't
now.
consider it.
So now, friends of
So
Deepak Parekh.
it's not politics. I've never said I'll join politics. It was only
Public
sector
service.
jobs.
Okay. Okay.
Public sector jobs I was offered. I don't want to say what a number of them, but I didn't. I sort of stayed away.
So now you're seriously saying this. You're going to put your feet up?
Yes. I have no role in the merged entity.
No, you've chosen not to take a role.
Yeah, but I can't.
Your bank chairman says he would love to have you as an advisor.
No.
You can't have an executive role of any sort.
Yeah. So,
Or on the board because of age limits. But,
yeah, I'll go and have lunch with Shashi once in a way. I'll go and have lunch with the chairman of the bank once in a way. That's
okay. I'm waiting to see that.
okay.
Thank you, Mr. Parekh, for your patience
Thank
and
you.
your time. And thank you for speaking with us here on BQ Prime. Thanks.